Hello everyone. Our subject is auditing and assurance as per NEP 2020 from MCOM Part-2 Semester 4. Our question is explain importance of the engagement letter. Importance of engagement letter first helps avoid misunderstanding between the auditor and management, which means the agreement clearly tells both sides what work the auditor will do. So later, no one can say, oh, we thought you were also checking this or that. It avoids confusion. Second, defines the scope and limitations of the audit, which means this tells exactly what area the auditor will check and what they will not check. So the company cannot accept the auditor find all fraud or mistake beyond the aggregation. Third, protects the auditors from legal disputes, which means if later any issue comes up, the auditor can show the signed agreement to prove they did what was agreed. The protect them from themselves from legal complaints. Both ensure compliance with professional standards, which means by following the rules of the engagement letter, the auditor makes sure the auditing is done properly as per ICAI and global standards. Audit engagement letter. We are going to understand audit engagement letter step by step. First, letterhead and date. Check that the letter is on the official letterhead of the audit firm. See the date when the letter is written. Second, recipient. The letter is addressed to the board of directors of the company. The company's name and address are clearly mentioned. Third, subject. The subject line tells us that this is an audit engagement letter. Fourth, opening line, which is very important. This line says that the auditor is happy to accept the work of auditing the company's account for a specific financial year. It also says that the letter will explain objectives of the audit, means what is the purpose, scope of the audit, means what area will be checked, responsibilities, means what the auditor will do and what the company must do. Limitations, the audit has limits. Not all fraud or errors may be found. Now, how to read such a letter? Read carefully, line by line. Understand who is giving the audit work and for which year. Note the key points like scope, responsibilities, and limitations. Remember, this letter sets the rules and understanding between the auditor and the client, so both know their duties clearly. Our first point is objective and the scope of audit. Our audit will be conducted in accordance with the standard of auditing issued by the Institute of Chartered Accountants of India. The objective of our audit is to express an opinion on whether the financial statement of the client give a true and fair view in accordance with the applicable financial reporting framework, which means the engagement letter. It simply tells us what the auditor plans to do and how they will do it. The main objective is for the auditor to check if the company's financial statements are correct and give a true and fair view. They reflect the real financial position of the company. To do this, the auditor will follow the rules and guidelines given by the Institute of Chartered Accountants of India, ICAI, which are called the standard of account auditing. This standard tells auditor how to do the audit properly and professionally. So the auditor is telling the company that they will follow these auditing standards and check the account to give an honest opinion. Our second point is responsibilities of management and those charged with governance. Management is responsible for the preparation and fair presentation of financial statement in accordance with applicable accounting framework, Indian standards, accounting standards, and International Accounting Standard Board. The implementation of internal control necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error, which means the engagement letter talks about the responsibilities of the company's management and those in charge of governance, like the board of directors. If it says that it is the management duty to prepare the company's financial statement properly and fairly following the correct accounting rules, like Indian accounting standards, and International Accounting Standard Board, means IFRS. They must also set up good internal control inside the company. These are systems and check that help prevent mistake or the fraud in the accounts. The management must give the auditor full access to all financial records, documents, and people needed for the audit without hiding anything. If the auditor asks for extra information during the audit, the management must also provide that. The auditor makes it clear that preparing correct financial statement and giving necessary support is the company's responsibility, not the auditor's. Third point is responsibilities of auditor. As auditor, we are responsible for first conducting the audit in accordance with the standard of auditing, which means the auditor has to do the audit by following the professional rules, which are called standard of auditing. These are like guidelines that tells the auditor how to properly check the accounts. Second, obtaining reasonable assurance that the financial statements are free from material misstatement, which means the auditor's job is to carefully check the financial statements and try to make sure where there are no big mistakes or fraud. This is called getting reasonable assurance. It means the auditor checks everything properly but can't guarantee of 100% perfections. Third, evaluating accounting policies, internal controls, and financial disclosures, which means the auditor also needs to look at the company's accounting policy, check how strong their internal controls are. These are the systems that helps avoid error and fraud, and also check if the company has shared all important financial details clearly and correctly. Fourth point is limitations of the audit. Our audit will be conducted in accordance with the generally accepted auditing principles and will provide reasonable but not absolute assurance. Due to the inherent limitations of the audit, there is a risk that some material statement may remain undiscovered, especially in cases of fraud involving or international misrepresentation. Okay, let's talk about the limitations of an audit. Even though the auditor will do the audit by following all the proper rules and standards, an auditor cannot give 100% guarantee that everything is perfect. The auditor can only provide reasonable assurance, which means they will try their best to find mistakes or fraud, but something might still be go unnoticed. This happens because every audit has some limitation. For example, if people inside the company are hiding information, faking documents, or working together to commit a fraud, it becomes very hard for the auditor to detect such things easily. Fifth point is financial reporting framework. The financial statement will be prepared in accordance with Indian accounting standards, International Accounting Standard Board, and other applicable framework. Our audit report will be issued based on the requirements of these standards and applicable laws. Okay. The financial reporting framework, which means the set of rules the company must follow when preparing its financial statement. For example, the company might follow the Indian accounting standards, International Accounting Standard Board, and other accounting rules that apply to them. The auditor's report will also be prepared by checking if the company has followed these rules properly and as per the law that apply in India or other countries also. So basically, both the company and the auditor will use the same framework of accounting rules and laws while preparing and checking the financial statements. Sixth point is billing. Our professional fees for the audit will be in amount excluding applicable taxes and out-of-pocket expenses, additional services beyond the agreed scope will be charged separately. Fees will be billed as follows: payment schedule, additional services, if any, will be billed separately, which means the fees for the audit work. The auditor is clearly telling the company that their audit fees will be fixed amount, for example, 50,000. And this does not include taxes or extra cost like traveling or printing. If the company asks for any extra work beyond the agreed audit, like special report or advisory services, those will be charged separately. The auditor will also mention how and when the payments should be made. This is called the payment schedule. So, the section helps avoid any confusion about the fees, extra charges, and payment terms. Our seventh point is other legal and professional considerations. We will maintain the confidentiality of all client information as per professional and ethical guidelines. Any disputes arising out of this engagement shall be resolved in accordance with the applicable law in jurisdiction. Our audit does not include detecting fraud, but we will report any suspected fraud to management or those charged with governance, which means if any problem or disagreement happens because of audit work, it will be handled by following the laws of the place both the auditor and the client agreed upon. The auditor's main job is to check the accounts and see if they look correct, not to find fraud directly. However, if the auditor finds anything during the audit that seems like fraud, they must report it to the company's management or the people responsible for the company. This means the auditor is not a detective looking for a fraud, but if they come across anything suspicious, they must speak up. Our eighth point is agreement and acknowledgement. Firstly, we will understand the purpose of the format. This format is a sample of how both the client and the auditor show they agree to the terms of the audit engagement by signing a letter. It's like an official handshake, but in written. Next, we will understand the format. First, for client's name, we have to write here client's name. This is where the company's name is written. Second, authorized signature. This is the person for the company who has the power to sign, like director, owner, or manager. Third, designation. The position of the person signing, like managing director, CFO, and so on. Fourth, date. The day when the letter is signed. Fifth, for auditors firm name. This is where the name of the audit firm is written. Next, sixth point, authorized signature. This is the auditor or audit partner who is signing on behalf of the audit firm. Next, 7, designation. The position of the auditor, like audit partner or senior auditor. Next, 8 point, date. The date when the auditor signs the letter. The both company and the auditor sign to make the agreement clear and legal. It is also mentioned that if the company has any confusion, they can ask the auditor before signing.